Hi everybody, Brian here from quantlabs.net. Just wanted to let you know about two stories um, here on my back end of the analytics. First one, now notice the date here, it's for October 23rd. This is a delay by a day. So right here we have an article about Europe stocks hit a new low in 2016. This can be found here at ft.com. This is the result you'll get. Paywall. So I'm going to delist, and I get the same problem with Business Insider as well. So F them. All right. So the next one we have is Seeking Alpha. A decent little article. So yeah, the FT is just to confirm that the Europe stocks have hit the lowest point since 2016. Troubling your outlook for U.S. equities. That's on seekingalpha.com. Here's a summary. U.S. equity markets, S&P 500 appears to be convincingly overbought. We know that. And there was another analysis done on Bloomberg showing the potential with Japan as number one over the next 10 years because it's fairly cheap, as well as India as number two. And here they talk about how the U.S. market's overbought, and over the next 10 years, you probably won't get a lot of return. Investor and percentage allocation of stocks increase, expected 10-year returns decrease. So if you increase your overall allocation to U.S. markets over the long run, you will get lower returns. That's what's expected here. Current levels, average equity share versus market return relationship suggests that we can expect negative returns real over the course of the next decade. So there's all these quantity stuff, regression, R squared, all the fun stuff, CAGR. So I'll let you do that. But here's the chart of obviously in a downtrend, with the R squared being this at 0.185. So here we have average equity share versus nominal 10-year forward CAGR. So let me just see if I can blow that up. Here we go. So here in orange we have average equity share, which has gone up. Nominal 10-year forward CAGR. So it's pretty well correlated to the markets, but I'm trying to understand how this is related back in blue. The CAGR, compounded annual growth rate, is correlating since, looks like, roughly 2004. Fine. Okay. No. Okay. All right. So now what they do is adjust with inflation. You get a better idea of the spending power gained over the subsequent 10 years. They've predicted that as well. So here, data points correlate from October 51 to April 2008, and it's just trended down. Real 10-year forward CAGR. Okay. So now I think average equity share versus 10-year forward. Again, the 10-year is slightly higher, but it's somewhat correlated. Okay, so here's the summary. I'll let you read the article. Bottom line is this: inflation will not do any favors to your expected return. Using the regression shown in the beginning of the article, not adjusted inflation with this 2008 average equity share of 44%, the inflated forward return 10-year CAGR of the S&P is 0.86, factoring in inflation. The expected real return will be negative 0.267. Okay, so I'll let you figure that out, but interesting story there when you factor in inflation. Okay, again, this can be found at seekingalpha.com. Title of the article came out October 16th. Troubling 10-year outlook for 10-year equities. There you go. Hopefully I'll help you out. Talk to you later.